Here are 7 news items from the world of cryptocurrency. First, news. A new type of missions for earning NOT has appeared in Notcoin. The team of the Notcoin Web3 game project has launched a new type of missions for passive earning of NOT tokens. The developers of Notcoin continue to offer players new features following the official launch of the NOT cryptocurrency last week. The new addition is called Earning Missions. They differ from the tasks or quests offered by the project before the release of NOT. By completing missions, you can earn Notcoin tokens passively, rather than as a one-time reward. You simply need to download and explore partner project applications and join their social media communities. The amount of NOT earned by players depends on their level. The higher the level, the greater the potential reward. You can increase your level by staking tokens. Currently, 4 missions are available to users, training for the TonGifts project and 2 third-party cryptocurrency games. The Notcoin team wrote on X that for the platinum level, the actual annual yield exceeds 300%. The launch of NOT and the listing of the token on major exchanges took place on May 16. In less than 10 minutes, the asset's capitalization broke the $1 billion mark, and Notcoin's trading volume exceeded $1.4 billion. The cryptocurrency has become one of the most traded assets on the market. According to CoinGecko, the token's quotations have fallen by 9.7% in the past 24 hours. Second, news. Stepn will launch a new fitness app and token. FSL, the company behind the popular blockchain game Stepn, is launching a new app called Stepn Go. The new Stepn Go app introduces various social interaction elements into the existing Solana-based game. Users will be rewarded with GGT tokens for physical activity. Stepn Go builds on the success of the original Stepn app, which has been rewarding players with cryptocurrency tokens for physical activity since 2021. Currently, over 5.6 million people worldwide use the fitness game, supported by well-known brands such as Adidas and Asics. The new version of the app will feature a so-called house system. NFT owners will be able to rent out digital sneakers and share cryptocurrency rewards. To start using Stepn, players will no longer need to have NFTs on their balance in advance. Stepn Go has an interactive map that allows users to see other users and leave messages for them. In the new player versus player (PvP) mode, users will be able to compete with each other and earn FSL ecosystem tokens (GMT). The project team announced the launch of a new token, Go Gaming Token (GGT). It can be earned through physical activity. The coin is intended to provide an additional incentive for users to stay active and not forget about the app. The alpha version of Stepn Go is expected to debut in the third quarter of 2024. During the launch, the project team will give away 5,000 digital sneakers among GMT holders. According to the roadmap, FSL plans to gradually introduce other new features, including customizable avatars and outfits. In the future, the app will also feature an energy system designed to maintain economic sustainability and the ability to earn GGT. Meanwhile, Stepn will continue to operate as usual, rewarding users with special NFT sneakers for walking and running. According to CoinGecko, the price of GMT has dropped by 6% in the past 24 hours. The token is currently trading at $0.224 with a market capitalization of $452.7 million. Third, news. Standard Chartered considers the possibility of launching a spot XRP ETF. Even before the official approval of applications for spot Ethereum ETFs, several prominent analysts predict that a fund based on Solana will be next. However, Jeffrey Kendrick, head of digital asset market research at Standard Chartered, named the spot XRP ETF as another likely candidate. For other coins, such as SOL and XRP, the markets will also eagerly await ETF status, although this is more likely a story for 2025 rather than 2024, said Kendrick. We would certainly welcome this, and I think the emergence of several ETFs for different tokens is inevitable, wrote Garlinghouse. Fourth, news. Bitcoin miner Marathon Digital has signed an agreement with the Kenyan authorities. One of the world's leading Bitcoin mining companies, Marathon Digital, announced a partnership with the Kenyan authorities to develop the country's already thriving renewable energy sector. According to the agreement, the partners will share technical knowledge and research, investment strategies, and develop critical energy infrastructure. The agreement with Kenya's Ministry of Energy and Petroleum is a milestone for our business as it provides us with the opportunities to implement our plans in the country. This demonstrates the innovative approach that Kenya is taking to optimize energy consumption and improve its technological infrastructure, said Marathon Digital CEO Fred Thiel. Despite the great prospects both sides expect from the partnership, Kenyan authorities continue to be cautious about implementing crypto and blockchain projects in the region. For example, in September 2023, the government banned the operations of WorldCoin, which was collecting and storing biometric data of Kenyans. Fifth news. Binance has burned another 1.4 billion LUNC tokens. On May 23, Binance conducted another burn of Terra Classic LUNC tokens, in addition to the procedure already carried out on May 1. According to the Terra Finder service, the cryptocurrency exchange transferred about 29,828 LUNC to a dead wallet with a transaction fee of 11.33 tokens. The crypto exchange began monthly burning of Terra Classic tokens after the collapse of the Terra Luna project in 2022. Usually, Binance conducts large-scale asset destruction on the first day of each month. On May 1, the cryptocurrency exchange burned about 1.4 billion LUNC, worth approximately $140,000. In total, the platform has annulled more than 59 billion tokens in 2,965 transactions. This is 51.9% of the 113.7 billion LUNC burned by the Terra Classic community. The highest number of tokens burned by Binance was recorded on March 2, 2023. At that time, the cryptocurrency exchange burned a colossal 8.84 billion LUNC, significantly reducing the Terra Classic supply. However, the reserve of the asset still remains impressive, 6.79 trillion tokens. Due to the vast amount of LUNC, all of Binance and the community's efforts to reduce the token supply have little impact on the asset's value. It still ranks only 116th in the cryptocurrency market capitalization rating. Sixth news. Bitcoin network fees have dropped to a 6-month low. Bitcoin transfers via the blockchain have become more affordable than they were since November 2023, according to bitcoinfocharts.com. Currently, the average fee for one transaction is 0.000041 BTC or $2.77. The median fee on the Bitcoin blockchain is 0.00002 BTC or $1.34. According to mempool.space data, users pay from 4 to 10 satoshis per virtual byte when transferring digital assets. These are transactions with low and high priority, ranging from 38 cents to 95 cents. Statistics show that between blocks 844660 and 844828, or about 168 blocks, the average earnings of a Bitcoin miner, received in the form of block rewards and transaction fees, was 3.3022 BTC. Despite the current low network fees, there are more than 170,000 unconfirmed transactions in the mempool. Data from Joho's Bitcoin shows that since the second week of April 2024, their number has not dropped below 150,000. The last time miners managed to almost completely clear the mempool was in October 2023, when fees were at similarly low levels. In contrast to Ethereum, the second largest blockchain by market capitalization, Bitcoin network fees are lower. Currently, the average fee on the Ethereum network is 0.0015 ETH or $5.89 per transaction. The median fee is 0.00056 ETH or $2.15 per transaction. It is important to note that this indicator applies to a simple Ether transfer, not interaction with a smart contract or the transfer of an ERC20 token. Seventh news. Before bankruptcy, the FTX crypto exchange paid informants $25 million. According to a report by expert Robert Cleary, appointed by the U.S. court to investigate the circumstances of the FTX crypto exchange's bankruptcy, one of the informants worked at FTX.US. This person discovered that FTX Group was misleading regulators and investors and lacked an adequate corporate structure. The informant expressed their concerns about the company's future in a letter to CEO Sam Bankman-Fried, former FTX engineer Nishad Singh, and former FTX lawyer Dan Friedberg. However, the management did not respond to the warnings. Friedberg even stated that the informant should apologize to the exchange's head for unfounded assumptions. Later, the informant resigned and received a compensation of $16 million. Another informant reported to management that they had identified instances of market manipulation and insider trading. However, their warnings were also ignored. 2 months later, the informant left the company, receiving compensation of $1.8 million. How other informants acted is not disclosed in Cleary's report. Although the names of the alleged informants remain unknown, they may include former FTX.US CEO Brett Harrison and former Alameda co-CEO Sam Trabucco. They left their positions in September and August 2022, respectively.